Hello and you're very welcome to this video in our series on Unit 4 for Leaving Certificate Business. And in this video we're going to learn about some different tax forms such as the Employee Details Summary, used to be P60, the P21 and the P12A. Look at the taxes that are paid by business, some taxes paid by households, it's for higher level only, and look a bit more in detail at what PAYE is and what it's about. So, first things first, the Employee Details Summary, formerly known as a P60, okay? So this is issued by an employer to the employee at the end of the financial year or tax year. The Employee Details Summary shows gross pay, income tax and PRSI is paid by the employee in that particular financial year, or in the year basically. The Employee Details Summary is needed by the employee for a few different reasons. One, if they're looking for a refund on overpaid tax, okay? So basically what the employee has to do, they check their Employee Details Summary against what their tax credits are to make sure they haven't been paying too much tax throughout the year. Or if they're looking for a refund on their PRSI contributions, if they've paid too much of their PRSI as well. So, the P21 then, okay, also known as the end of year statement, or is colloquially referred to as a balancing statement. This basically shows you can request it from the revenue, and it's available from the revenue online, or you basically tells you if you've overpaid or underpaid tax in the year. If you've overpaid tax, the revenue in Ireland are really good. They'll issue a tax refund and give you the money back. And if you have underpaid tax, they will issue what's called a tax demand. So basically they tell you we're going to charge you extra tax over a period of the year or whatever to make up for the tax that you haven't paid. All PAYE taxpayers are entitled to request Form 21 every year from the revenue, and basically it's an end-of-year summary showing what your tax situation is and what your allowances were, what your income is, and the tax you should have paid versus what you paid and the difference. That's outstanding. The Form P12A, and this is very relevant to all you students out there, okay? This is the form that you fill out when you first start working for your very first job. You send it to the revenue so that they can calculate your tax credits and see what tax rates you should be charged. Until you send that in, you will be charged emergency tax. The new employees charge emergency tax. That's the maximum amount of tax can be charged across the board until it's received and processed by the revenue. But don't worry, that emergency tax can be claimed back. But no one likes paying emergency tax and seeing all their income disappearing off. So, now that we look at the tax forms, we're now going to look at the taxes paid by businesses. Okay? So you have corporation tax, which is an annual tax on company profits. You're probably familiar with this. It's 12.5% in Ireland, which is one of the lowest in the world. And it's a reason why so many multinational firms set up here in Ireland is because of Ireland's incredibly low tax rate system as well. Low corporation tax as well. So that's why the likes of Google, having Microsoft, PayPal, all having their headquarters here in Ireland benefit from that. Okay. The net tax, sorry, I should say as well that the corporation tax is charged on their net profit position. Okay. The value-added tax then, okay, is indirect tax on goods and services paid by consumers and businesses. In other words, that VAT you pay to the business, doesn't go straight to the government directly. Okay, it's tax on consumer spending. We looked at before in the last video that there's different rates of VAT applied to different types of goods. Okay, businesses have to register for VAT, and therefore they receive a VAT number from the revenue. Businesses pay VAT, value-added tax, every 2 months, or what the word is remitted, okay, to the revenue commissioners. So the collection of VAT, though, is a very, very big administrative cost for businesses, okay? Because if you think about it, they have to calculate how much tax or VAT they've collected in the sales they've made, and they write that off against the VAT that they've paid other people then as well to find a balance they owe. High rates of VAT on raw materials and components increase the cost of production for business, affecting margins and cash flow. Margins, we're talking about the idea of the profit margin, how much money they make, and cash flow, how much money they have to actually keep the business operating. High rates of VAT increase the purchase price for consumers as well, reducing demand for goods and services from that particular business. So VAT can have a lot of knock-on effects as well, okay, but it's also a huge earner for the government. Another one we have to look at there is customs duties, also known as import duties, becomes even more relevant now with Brexit. It's tax on imports coming into the country from outside the European Union. Commercial rates is another tax that you may not be familiar with, may not have seen before. It's a tax charged by local authorities on commercial properties, so that includes, say, retail outlets, like shops, offices, etc. And it's used to fund local government services, so for example, litter cleaning, road sweeping, street lighting, all that type of stuff. The amount that's charged to businesses is based on the value of the property they own and the size of the property as well. Okay, so obviously a bigger shop has to pay higher commercial rates than a smaller shop. Also, where the shop is as well, and how much space in the shop front they're taking as well. Generally it's charged, so the further away from the shop, the main street you are, the less you have to pay in commercial rates. Employers pay PRSI then, so we are familiar that employees pay PRSI, but did you know employers pay PRSI as well? PRSI stands for Pay Related Social Insurance, of course, and it's a tax charge to firms for every single person who works them. It's a small percentage of the gross wage that's paid to them, and it's used to fund payments, payment claims made to the Department of Social Protection, for example, job seekers benefit, etc. So it's the exact same as employees PRSI, but the employer also has to pay a portion on top as well. Okay, PAYE, you're familiar with the idea of pay as you earn. Okay, it's a direct tax on income from employment, and it's taken at source. So, for example, basically the employer takes it off and gives it straight to the government, i.e. the revenue commissioners. The employee never sees it. We talked about the certificate tax credits before. So the employer knows how much tax credits to take off the employee, and first how much they actually have to pay. The collecting PAYE and administering PAYE is a huge administrative burden and task on the business. So a lot of bureaucracy involves the different forms, like there's your form P12A, the P12, P21. So there's lots of different tax forms and a lot of paperwork involved in it. But it is, however, progressive tax. What we mean by that is that there's different rates charged depending on how much you earn. So the more you earn, the higher tax you pay. Okay. The thing is, the downside of having higher rates of PAYE can be a disincentive for people to work overtime. If an employee is just earning around the standard rate cutoff point, they're less likely to want to do overtime because, well, they're not going to. They don't want to be paying higher tax on the extra money they earn. That can affect business ability to, make sales, make orders, continue to develop, etc. Okay. Last one then is the self-assessment income tax. Now, this is paid by self-employed people on the income they earn. Basically, self-employed people are responsible for looking after their own income tax and for calculating how much they owe. So every year they have to fill out a self-assessment income tax form to work out how much money they made and how much tax they have to owe, basically. So that brings us to the end of this lesson. We've learned the difference between the different tax forms available, the taxes paid by businesses, households, and all about PAYE. If any questions, ask below in the comments. And of course, if you enjoyed the video, give it a like and please subscribe to the channel. Thanks very much for watching. Bye now.